unemployment. That is our top stories for this afternoon. You can always visit our website on www.cnbcafrica.com for more. For now, it's back to you, Fifi.
All right, so more Americans filing for unemployment benefits than was expected, and we also had other data out of the US which showed that the housing market continuing to be pressured by the interest rates north of 525 basis points that the Fed has raised since it started its hiking cycle. Of course, it seems like a bit of difficulty there on the consumer front, obviously strengthening the case for the US Federal Reserve to start cutting interest rates. But when is the question? We've got Hani Abuagla. He's a senior market analyst over at XTB Mina, joining us for more. Hani, thanks so much for your time. I mean, perhaps we do start off with the labor market numbers that came from the US, the latest jobless claims, also the housing data. What is your take then on the state right now, and ultimately what it does mean for the rate cut debate?
Thank you, Fifi, for having me today. I think the data, it's very important data, especially the jobless claim, because I think the Fed is watching that clearly. They want to see a weakening in this data more and more. That means the jobs market is slowing down. And I think it's the jobs report, the jobs opening, it went down from 12.2 million from almost last year, March, all the way down to 8 million jobs opening only. That means it's 1.2 for everyone who's applying for a job is to find a job. That's a really, really small number, and it will continue to decrease. Currently, we have the added jobs, but it's not a permanent jobs. It's a part-time jobs more. That's why it's very easy to lose. And currently, we have seen the numbers like back again to those numbers that we haven't seen since 2020, and especially also the housing permits when it came negative for both data, housing permits, new housing, and also the housing permits itself. Both of them, it came negative. That's its obvious result for keeping higher for longer. When you keep the interest rate very high for longer time, we were talking about 3 cuts since the beginning of the year. Now we are ending almost half of the year and we haven't done any cut yet. That's for sure going to hurt the housing market, and this is a normal result. But the market straight away start pricing in a second cut in September. The September cut, it moved from almost 60% levels to 75 levels. That means the market is clearly now expecting 2 cuts, not like what the Fed said, that they say only 1 cut by the end of the year. That means we might see another or our first cut before even the election on November. Yes. So I think 2 cuts, it's already priced in the market, and the market is waiting for that.
It will be interesting, of course, to see who is right, but with that, only time will tell. Hani, just reflecting on firms still very much in record ground for a lot of the indices, and I see that there's still a hoo-ha that is being made around Nvidia, which is now the most valuable company in the world by market cap. This despite the fact that, I mean, the stock is already up some 183% already so far this year, but it seems like that stock split that they had a few weeks ago are certainly giving a lot more impetus to the momentum thereof. Just your take on Nvidia, investing in Nvidia right now, and what your strategy is around this stock.
Oh, okay. Nvidia, I think we are not shocked that we can see Nvidia on top of that ranking, because it was obvious that this stock, it will break the 1,000, the old numbers before the splitting 10-1. It was obvious that it will break the 1,000. It will go around 1,380 and 1,420, which is around 142 now. I think just now the stock opened around 140. That's another 3% up, make this company around 3.42 trillion. This company is making a big jump, 175% jump. I think this is very logical, because this is the company is leading the AI, and the AI, I think for data centers especially. We know that the Nvidia, since almost 2 to 3 years, they moved totally away from providing chips for gaming to providing chips for AI data centers. and they were like currently they are like taking 86% of that market. Yes, it went down again a little bit to 80%, which is very high still. They are almost dominating that market. And since there is a lot of demand for the AI from the big companies like Microsoft, like Google, like others, OpenAI for sure, as long as like there is many companies demanding for AI, and as we know that there is only 5% of the total companies around the world, they are demanding and applying AI. That means if that number increase and that percentage increase, for sure there is a big demand coming, and that means Nvidia will continue to grow up and up, and we will not be shocked at all if we've seen Nvidia touching 4 trillion before end of the year. I think this is the only company in the world. It's very clear that it might touch 4 trillion and 5 trillion in the future. And I think it's fundamentally, it's true. Currently, the company is making very high profits compared to the last year and 2 years ago, from 4 billion only to 29 billions. That's a very big jump. And it's for sure, that means logically and technically, it's understandable. And I think it will continue to be there on top 3 for a very long time.
Sure. I mean, if you thought that it's expensive at current levels, if you're mentioning the likes of 4 and 5 trillion not being off the cards anytime soon, then those who do think it's expensive might need to rethink their view right now and, I don't know, perhaps do something about it. Hani, just a parting shot on the interest rate decisions that we did see today. You were talking about cuts. It was notable that we had banks over in England, the UK, the Bank of England, keeping things the same, as did Norway, as did even China. Just anything stand out to you in today's session from the rates decisions that we got?
I don't think we have seen anything different. I think the same shock we always get from the Swiss central bank. They're always doing surprise things. They already cut, and they were one of the first central banks leading the cuts, I think, currently. So I think, and the shock for the market wasn't the cut itself. The shock from the market that they said that we might jump in the market if you have seen, if we need to jump in, means like if the CHF move even higher than that or lower than that, we might enter. That's, I think, made the CHF, the currency, move lower against the dollar. I think the second one is it's not a surprise at all that they left the rate as it is, the Bank of England.
Sure.
It was obvious that they will keep the rate as it is because we are heading to an election, and for sure they will not surprise the market with a cut now. Second thing, the market, I think they were expecting that they might cut after touching the 2% target of the inflation, but what we don't know that the service CPI is very high inside, and the service CPI, the prices, it came a shock to a market which is went up. That means the raw material or the things going to the service market will make between the CPI for the services and the real CPI. I think central bank knows this very well, but I think they give a very tone that they will cut this year. That's why the market start pricing August and on years bonds. It went down, breaking level that November last year, and also the FTSE 100 break up to more than 8,200 level.
It's going to be an interesting time to watch all these rate reflections playing out, and whether the market's expectations of the cuts are the way that things go, or whether it is the guidance of the governors of the central banks themselves that actually play out. But Hani, we'll leave it there for now. So that was the focus on what happened globally, just to bring the focus just a bit on some of